Hello guys, so I'm back to recording this video where I want to show you how to incorporate order blocks, okay, in entering the trades. It will give you a little bit more precision to what we have learned already. Okay, so let's look at this example. So I'm doing this on a 1 hour chart just to show that I can show you clearly how it works, lay out the rules. Now you can replicate this on any time frames that you would like. More the noise, uh, more work is needed, but when a higher time frame bias and higher time frame framework, it's pretty easy to figure this out. Okay. Now, ICT has his own concept of order blocks. Okay, so he has order blocks, which is nothing but the last up close or down close candle before the opposite move. And when the price retraces back into the up close or down close candle, that's when you enter. Okay. And he also has breaker block, which is nothing but failed order blocks. Now my concept is similar to what he is teaching. It's nothing revolutionary, but it's somewhere in between. Okay. And my theory is that every up close candle that takes liquidity is a bearish order block, and every down close candle that takes liquidity is a bullish order block. Okay. And how we can use these bullish and bearish order blocks that has taken liquidity to enter uh, in our trades. Okay. Now we have already always have a buy side and a sell side. Can take whatever it is. Now this price action is your buy side of the curve, and similarly this would be, we can call it as the sell side of the curve. Now whatever order blocks that gets created on the buy side will offer resistance when you are on the sell side of the curve. Now that is what you're going to learn how to do that. Now with my concept, we are always looking at the last rejection before we break into the dealing range. So we see here 17 is the last rejection, and we broke 83 here. So market structure shift, and also we broke into the new dealing range. Now we expect the market to fall at 83, and it did here in this fair value gap is what we expect to see the market to fall. Now this is pretty easy because there is just this one fair value gap. Maybe there is this tiny other fair value gap here that is also at 83. But sometimes you can see price actions like this, huge gaps. Okay, where do we enter here? So even this fair value gap is also at 83. This is also at 17. Okay, it's also part of 83. So how do you figure out where to enter this trade? Now for that, what we can do is, as I said, so we have a buy side, right? Buy side of the curve. Now on the buy side of the curve, we look for bearish order blocks. Okay, with my definition. Now if I scroll to the left, so this is the buy side of the curve, which we are kindly right now mitigating with this the cells setup that I showed you. Now look for, so we are referencing 83 and 70. Okay, so look for a bearish order block here that has taken the liquidity and is on 83, or it's on one of the levels that we are referencing. Now what I'll do is I'll draw a 50% level to it, because we know most of the accumulation happens at 50% of the order block, and 50% is pretty sensitive, that is the mean threshold, and also the opening price of the order blocks, which is pretty sensitive. Okay, now since we are bearish, we are going to find an up close candle that has taken the liquidity, and that is on the 83 level. Now look at here, where does the price reject off of? It's right at 50%, right? So you can see one, two, three, almost three candles consolidated right at the mean threshold of the order block, and then fell. Okay, so we need not randomly short somewhere here. I mean, as I said, this is an easy example. You could have shorted anywhere and you would have won. And you can see from 83 we reject off of this GB level, and where do we go to? We go till 17 here. Okay, this is where you could have taken profit. I would wait for a propulsion block to touch this 50%. So I would not immediately short. I mean, obviously I would immediately short here or even in this third candle. Okay, because for a bearish order block, block would be another up close candle. So it touches this 50%, drops, comes once more back, hits the 50%, again a propulsion block, expands away. All right. So let me write down the rules for you guys. So rule number one, look at the last swing high or low and rejection from a GB level. Rule number two, wait for an FVG to form at the, basically rule number two would be break of DR and break of opposite GB level. Okay, so we need to understand the market structure shift. So we then definitely know we are bearish in this example. So rule number three is wait for an FEG to form at the same or opposite GB level from where the sell began. Rule number four, identify a bearish or bullish PD array that has taken liquidity mark 50% of the OB and extend the fib. Rule number six, wait for propulsion block to form at 50% of the OB. Rule 7, exit at the opposite GB level from where the propulsion block rejected from. Okay. Now, why did I find this model? Is because it gives me precise entries. Okay, I know I'm waiting for a propulsion block, so I know that is where the expansion happens. And I also know 50% is pretty sensitive of the order block, so I'm going to wait till the 50% is hit, and then I'm going to enter the trade. All right, so let's look at another example. Maybe a buy example. Okay, so let's look at this level and see if we get a trade. So this is at 71, so we don't break 29, so not valid, so I'm not going to take it. Okay, I can take this trade. So this is at 71, so we break 29. So we expect something to happen in this fair value gap, because let me drag the rules here so you guys can see it clearly. I don't know where my rules went. Okay, anyway, it's there in the video, you guys can see it. I'm gonna walk you through anyways. Right. So you have this volume imbalance as well. So that's where I see the price took support. But if we are expecting something to happen in this fair value gap. Now what do we want to look at? We are bullish. Okay. So we want to look at a bullish uh, order block that has taken the liquidity, and that is at 71. Okay. Now if you go, that is the first order block that you need to look at. So if we look at this down close candle that took the liquidity. Okay. And you can see the 50%, the propulsion block gets hit here, and then price expands up. Right? It need not come into this FVG because the bullish order block was here and the mean threshold of that order block was here. It was not in this fair value gap, and for that reason this fair value gap is left open. Now obviously a wick can come here. A wick will always do the damage, and it will be still be considered as a support at 50%. So that is something we need to be careful about. And in our earlier concept we were using the stop loss as the low of this FVG if you are entering somewhere here. Right now that headache is gone because I'm using this order block to enter into the market. So the low of the PD array that I'm choosing to enter from should be my stop loss. So my stop loss will be this. Okay, so I saved almost half of my stop loss by using this concept. Now why this order block? Because it took this liquidity, it is on 71, and that we are referencing the same GB levels. And you can see pretty much the 50% propulsion block expands the market away. Okay, this is your second example. Let's look at this, what happened here. Maybe this, or even this. So this is your 17 level. So we break 83 and we break the new dealing range. So you expect something to happen in this 83 range. So what do? We are bullish. So you need to look for a bullish order block. So this is not an order block, although it took liquidity, but that is a bearish order block. So we want to look at bullish order block. Scroll to the left. Okay, so we want to see 83 touch, right? So nothing is here. Now if you look at this, this is the order block that I'm interested in. Why? This is touching the 83 level, and that it took the order liquidity here. So this is my 50%. So I'm expecting something to happen here, right? And you can see just missed it. We came pretty close to this 50% of the order block. Okay. And then what happens? This is your propulsion block. Price expands. Okay. So while doing this on a 1 minute or a 5 minute, you need a little bit more patience to scroll through the charts because there is a lot of noise. And I would not suggest that you scroll for multiple days just to find an order block. Okay. This is something that I found useful for precise like sniper entries where as I showed you in the second example, right? We didn't have to wait until the FVG to be hit. Okay, why? Because the bullish order block was gave us the 50% order block of that order block prior to the FVG, and the propulsion block was created there. So we could just trade it right there itself rather than waiting for an FVG to be hit. Okay. So once again, the rules are, I'm gonna wrap it up just by giving you the rules again. Look for a rejection from the previous GB level, so 89, right? So you expect something to happen, and we wait for the break of the dealing range, and we wait for the opposite GB level to be taken, which is 11. So we took this. Now we expect something to happen in this price action, in this fair value gap, which is at 11. Now, what do I expect here? I want to see a bullish order block that is on 11, which is this, which has grabbed the liquidity, a swing low. Mark your 50% and wait for a propulsion block to be created. Okay. So in this case, you would have lost the trade. Uh, Maybe we are not referencing this level, or you would have anyways lost this trade because your stop loss would have been here and it would have hit here. But you would have entered as soon as this propulsion block is created, and tried to, if we had this direction went right, then you would have ended up in profitability. Okay, maybe we were still in sell program. Can look at for this. So last rejection at 29. So you can expect something to happen at 29 here. This FEG was still open. Okay, so this is a bearish scenario. So what I'm going to look for is a bearish order block. Okay, so you can look for this. So this order block took the liquidity. So I'm going to add 50% to it. See, although the wick went above and did the damage, but the bodies were contained within this order block, and our stop loss never got hit in terms of the body never closed above, and we rejected off of this propulsion block. Once this block was created at 50% rejection. And where do you expect the market to go? From 89 to 89 here. It went a little bit beyond as well. Okay, so this buy didn't work because we were already in a sell model and this FEG was still open. Let's see if I can show you another clear example just before I wrap it up, because I know a lot of questions will come on this, and if I'm able to answer everything in this video, then that would save a lot of time for me. Okay, what level is this? 29. So we broke 71 and then broke into this new dealing range and kind of rejected from the 29. I don't know this why this indicator just does this. Sometimes might be a system issue. Okay, so we expect something to happen in this fair value gap. What is there? A bullish order block that has taken the liquidity. So you can take a trade right at here once the propulsion block is created. Okay, you had to suffer a little bit of drawdown. We end up expanding. And you can see the propulsion block gets support at 50% of the order block. Okay, you can consider even this as your propulsion block. You consolidate around 50%. That's what ICT talks about. 50% of the order block is where you consolidate, and this is where you see expansions as well once the consolidation is complete. Okay. And these are not, we are on 1 hour, so these are close to 160 handles. Okay. and your stop loss if in this trade would have been here. Now with this concept it's only here, so you're out once the candle closes below this. Okay, so I've shown you enough examples, so just backtest it and let me know how do you find this. Is it helpful, is it not? Okay, so this indicator came back, so I want to just show you. So this order block was touching the 71 level. Okay, did not, it was not touching, sorry. So then we will have to see whether this took liquidity. So it didn't. Let's look at this candle that took the liquidity, yes. Okay, so where is my, so we never hit this liquid. Sorry, let me show you where is this. Okay, this was the, it's 71. Okay, we didn't hit any of this liquidity at all. In the order block. So this one missed by a slight. Okay, I see this one is there. Okay, I missed this. So look at this order block, right? So this takes this liquidity and you can see this 50%. The body never closes below this. So once this propulsion block is hitting the 50%, you can enter and you can see the expansions. Okay, so you need to, even I'm very new to this model. I've been practicing it only for a week or so. So even my eyes are getting trained to look at these order blocks. So it will take time for you guys as well to immediately, I mean, you won't be able to see it immediately. But do this trial and error and see, figure out, and if you come up with your own observations, do let me know. Okay. So all the trade that I took, almost apart from one trade that we took loss, everything worked out pretty well. And this gives you a precise entries. Now you need not worry about this order, this fair value gap, because even though it is part of 71, our order block is here that gave us this one. This is our order block that gave us this entry. And this expansion was pretty great as well. The first touch of the propulsion block, we went. The second touch of the 50%, the expansions were pretty great. All right. So hope you guys find this useful and we can discuss this on Discord. Maybe you guys can share your own examples and I will try to offer as much as help as possible. Okay. Thank you.